Hey everyone, welcome back. Today we're looking at my personal portfolio. Yes, we're going to have a look at my personal portfolio. My personal portfolio is mostly conducted of research. I'm simply researching into the market. I'm not putting in too much money into the market, but I'm placing enough that I can be emotionally invested, and that's enough for me to conduct research. And that's all I'm doing at the moment. I'm not investing seriously yet. Now, I'm working on a few information specifically about Apple and Nvidia. They've been doing really well lately, especially Nvidia. I definitely want to add a position to Nvidia. It won't be a large position, it'll be a very small position. And this is very deliberate. Once again, I'm not really trying to make money from Nvidia or Apple right now. I'm simply conducting research. And I'm going to show you what I mean when I say research. By the way, this is some information that I'm working on for my new newsletter. By the way, this is some information that I'm working on for my latest newsletter. This is on release, unpublished, but it will be published soon. Go to the website Monument and subscribe to our newsletter to get this newsletter update. But what's really incredible is Apple's iPhone Q1 revenue since the iPhone was introduced. This is beyond crazy. They went from 378 million in 2008, 2010, 5.4 billion. 1 year later, they more than doubled that to 12.1 billion. Another year later, they almost doubled it to 22.3 billion. 2015, they almost doubled it again, and they've been doing well ever since. But let's say we did invest around 2016. 2016, 32.9 billion. Right now, 2023, 51.3 billion. That's the Q1 revenue for Apple thus far. So it's out of control. Now, Nvidia, on the other hand, is even more insane in my opinion, because with Apple, it was kind of predictable. With Nvidia, it's not so predictable. 893 million in 2008. 2011 and 12, 1 billion. 2014, 15, 16, approximately around 1.1, 1.2, 1.4 billion. And of course, it went to 3 billion, it went to 2 billion, 2.6, but it really started to get crazy recently, around 2020, 3.9 billion. 2021, 6.5 billion. 2022, 6.7 billion. And this year, they're looking to make 11 billion in Q2 revenue. That's intense. And of course, they're in the $1 trillion club right now. This is Nvidia compared to other semiconductor companies. AMD, Broadcom, Qualcomm, Intel, of course. We all know Intel. The list goes on, but I'm conducting some research on these, and it's going quite interesting thus far. Now, how about Tesla? I've been conducting research on Tesla. I've been investing in Tesla, and it's been good thus far. So let's have a look, right? I remember buying one Tesla share. This is before the stock split. Back in 2022 in May. That was last year in May. I sold in July. The buying price was $524. My selling price was $645. I made a really good margin, made a really good return. But like I said, it's just research. Now, once again, I've bought back into the market. I bought back Tesla shares, just one, because I'm just conducting research, £127. That's approximately 161 US dollars. Why is that important? Because the share price is now 256 US dollars. So when did I buy? I bought in April, just at the end of April. That's just a couple months ago. In fact, 2 months ago. This is now June, 2 months ago. Now this is another look at my portfolio. And in that short period of time, you can see my one Tesla share has done incredibly well, 62.26%. I've seen it significantly higher. The price of Tesla at one point was $274. So my judgment is good on Tesla. My judgment is certainly good on Tesla. Another stock I'm keeping an eye on is Disney, Walt Disney. Let's see, I bought my first share May last year, $89.86, really cheap. I thought it was incredibly undervalued. So I was like, yes, I must do this. This is a great price. I sold in September that year, last year in fact, at $97. Still made a little margin, a little bit of profit. Nothing insane, but I think that's like 8-9%, which is not too bad at all. But I'm not bragging. 8% return, 7% return, 9% return. It's all right. But 62% on Tesla, that's really good judgment. So of course I sold because it was just research. But this year I started buying again, once again in May. It's interesting that I always buy around May. I have no idea why, but it's an interesting time of the year. It looks to be like a time of the year when the stock price is really down. And I take advantage of that because I see Disney as an undervalued company. They are undervalued. Now you can say Disney Plus is not as big as Netflix, which is fine, but that's not Disney. That's just a small percentage of Disney. So I started buying back in May. We bought 2 shares. First share was £83 and the second share £73.92. I consider that to be extremely undervalued. I consider that to be really good judgment. Similar to Tesla, Disney has certainly had its moments. When I bought last year, the Disney price went up to 124 US dollars. Absolutely incredible. And of course, it's been higher. There's been 2021, February time. And I wanted to buy in late December. And I wanted to buy Disney share because there was times Disney share was $85. There was time it was $124. This was after the pandemic started recovering, but during the pandemic, it was around $85. And I bought 2 Disney shares recently. So these are pandemic prices. So I consider what I'm buying right now to be pandemic prices. Can't lose because Disney is the kind of company that will recover. They are undervalued right now. It's an uncertainty time for Disney, similar to Meta, but it is not the end of the world. Meta also has similar difficulties. That's one of my biggest regrets was with Meta. I certainly wanted to add Meta to my portfolio, and I feel really dumb that I didn't because last year, November, $90. There will never be another opportunity to buy Meta at this price. If there is, but to be honest, I'll buy Meta just around $210, $215. That was the price it was in April. So it's been going back up, straight up. So clearly, they're not being affected as heavily as we expected from the Apple insurgency. But I'm not invested in Meta yet, but I certainly want to. What I am invested in is EVgo, charging company. I'm invested in a few different charging companies and crypto mining companies. Yes, I understand. These are pegged against crypto. These are pegged against Bitcoin, primarily Bitcoin, which is precisely why I invested in Marathon Digital Holdings and Riot Platform. I noticed that these are pegged against Bitcoin quite a lot. So if you can't buy Bitcoin because it's really expensive, buy the stocks, buy the company that mines Bitcoin. And this has worked incredibly well for me thus far. Let's take a look at Riot, for instance. Now, Bitcoin has been showing some bullish signals recently. It's been slightly recovering recently to 30 grand, which has been really good. But each time this happened, my share price goes up, which is really good for my portfolio. But what I did, I bought incredibly cheap. I also bought at expensive prices, which I understand. But I understand how to make up the difference. You see, when you buy at expensive pricing and you think you're going to lose money, you just need to buy extremely cheap to make up the difference, to equal it out, to balance it out. I'm very much balanced out, even when crypto isn't doing all that well. So imagine when crypto does start to do well again. Honestly, the other day I was up 200 alone. I'm not too worried about this. So this is just cruising along. Now, EVgo, I do have some slight concerns because the EV charging market is certainly a little bit of uncertainty right now. And I have other holdings in EV charging companies, but fundamentally, long term, I believe in EV charging. Not just EVgo, but Blink charging, Tesla superchargers. I invest a little bit in Rivian as well. Now, this video was mostly just to go over an overview. I didn't really want to go into details on the company's revenue, but I can. In this video, leave a comment. Would you like me to go into more details on the revenue of these companies and why I chose them and how I expect, logically, how I expect them to recover? So yes, these are a few holdings that I have. Riot, Marathon, Tesla, EVgo, Disney, Blink Charging, Neo, of course, Rivian, of course. I do like Rivian, and it's good to see my Rivian portfolio down again because recently Rivian was doing a bit too well. And I started to get worried because I hate it when the stock price is expensive, like $15. I can't deal with that. So if my portfolio is in the green, I'm quite happy because this means that it is cheap and I like to buy cheap shares. And by the way, let me just say, Rivian delivered 20,000 vehicles last year. We're looking to double that this year, if not 50,000 vehicles. I think philosophy-wise, Rivian is one of the few companies that have that Tesla mindset. Rivian develops their own infotainment software. It's a little bit buggy, but they're improving it constantly, right? That's the plan. That's the long-term solution. They're developing their own charging network. They do have a very specific area of a niche, SUVs and pickup trucks. That's good. That's a great way to start. Start with the customers you know best. Start with the customers that gives you the best chances of survival. I do like Rivian, and I know that can be a little bit controversial, but I do like Rivian. I like the look of the vehicles. I like how the company is functioning. And I like the possibility that they could one day deliver 1 million, 2 million, 3 million vehicles. That's very much realistic. Granted, their IPO price was way too expensive. That's why I never bought. I always told people, I'll buy when the share price is around $15, $12, $10, $8. Yes, that's when I'll buy. Granted, right now I'm trying to avoid buying at $15 because why buy at $15 if I can buy at $13? I can save some money, right? Even $15 right now for me is like, it's a waste of my money if I buy at that price. I know it's going to go back down. Right now it's going down, so I'm quite happy. So we also have Palantir. I just bought one Palantir share because I want to research more about the company. I want to write more about the company. I want to learn more about the company. I also bought one share of Watches of Switzerland. Yes, I've been looking into the luxurious timepieces market. One share of ChargePoint. That's down 33%. I'm getting more and more bullish with this company. The market cap is 2.6 billion. So I will be comparing that to EVgo quite soon. So we can do some more comparisons on that, but I'm liking where this is going. I think for me right now, this is the perfect time for me to buy. By the way, not financial advice, but it's the perfect time to buy. Look, the last time it was at anywhere close to this price was last year in December. That's like 6 months ago. And that was $8.25. Right now it's $7.36. It's a perfect time to buy. So this is what I like. I like to invest a small amount, maybe one share, maybe $5, maybe $20. I don't know, just a small amount. And I'll watch it go down and then I'll buy more, right? So I don't care if I lose my initial investment. What I care about is if I can make up the difference and how large of a difference I can make up. That's what I'm investing. I invest based on levels. So that's ChargePoint, of course. And of course, I'm investing a little bit into Apple, like £5, £5 into Starbucks. And this is so it goes down. Then I can buy more. Like when Apple goes down 10%, I'll buy more. When my portfolio of Apple goes down 10, 15, 20%, I'll buy more. But this is why I invest such small amount, because I like to buy cheap share. That's why I'm buying Disney, because it's cheap share and it's undervalued. So one thing we came out of this learning is that I need to buy more ChargePoint because it's undervalued. Seriously, right now especially. Keep in mind, last year when it was $8.25, it actually recovered to $13.38 in February this year, proving that it can definitely recover. So we're not worried at all. I hope you enjoyed this video. As you can see, some of my portfolio is in green. As you can see, some of my portfolio is in red, exactly what I need. I need more of it to be in red, if I'm being completely honest. But that is it for today. Thank you for watching, and I'll see you in the next one. Let me know, should I make more videos like this? Thank you for watching, and I'll see you in the next one.